Good morning, everybody. Hey, it is Thursday. It is October 27th. Hey, guess what? It's not only unemployment day, it is GDP day. We'll talk about that and more in just a few moments when Scotty comes on board. Before we do that, though, let's not forget that in the world we live in, there's a lot of things that you and I cannot control, but we can control how much risk you have in your current portfolio. But you have to know what
The Highlands Light FM is 8:38. Let's head to beautiful downtown Sebring. Phillip's on the line. Let's see what's up at Statler Financial Services. How we doing, Phillip?
Hey, doing well today, Scotty. I hope you are too. Today's the big day. We don't only have jobs to talk about, but we have GDP to talk about. Before we do that, though,
okay,
let's start out with what happened yesterday, because it was a mixed bag yesterday. For the most part, the Nasdaq took the biggest brunt of it. Nasdaq down 2% yesterday, down below 11,000 again to 10,971. So they took the brunt of it. The S&P 500 down 0.75%, down to $3,830. The Dow Jones Industrial 30 actually was a tinge green yesterday by $2.37. So not a huge deal there. Not a huge deal.
Okay. Yeah.
So that gives you a starting point. But so let's dive into some economic news. Yesterday, after you and I spoke, we had new home sales came out. Now they were better than expected, came in at 603,000, but still down from where they were last month, which is kind of what we expect, right? We expect home sales to kind of continue to slide probably from here on out for a while, just because interest rates continue to go up.
Sure. Makes sense.
Big news. The big news today is the first reading of our gross domestic product, the GDP. And for the third quarter, it was expected to go up 2.3%. It actually went up 2.6%.
Really?
Which means our economy is still is back to growing again. Which was and growing faster than expected. Now that does bring some concerns up, but the markets are liking what they're seeing right now. We've seen a pretty nice little jump on at least the Dow, a little bit of jump on the S&P 500. We'll talk about a little bit more of that a little bit later as we continue to watch what happens with those numbers. So good news, at least on that front to a certain degree. I mean, there may be a little bit of a issue, a little cloud in that lining, right? Because we have to still rely on the Fed. And what's the Fed going to do if the economy still is hotter than they think it should be? Right? That means they're going to continue what they're doing, bringing inflation under control. I mean, we're already seeing the ECB, the European Bank, came out overnight and they raised interest rates by 0.75% over there in Europe. And we pretty much know that that's what's going to happen. Later, well, I shouldn't say later this month. This month's about gone. The first part of November, when the Fed meets, we expect a 0.75% increase there as well, just because inflation still continues to ratchet up, and that's just not good news. So let's look at the job front. Initial claims were basically in line. They expected initial claims to be 220,000, came in at 217,000. I mean, that's a statistical nothing there, right? So, but one thing that did catch my eye was continuing claims. Those people that are on continuing claims are up, about 50,000, 60,000 people are more on continuing claims than were there last month, which kind of shows that more people are unemployed Fed may like that. I mean, we'll talk about some employment stuff again tomorrow, but the other issue we have is durable goods. You know, cost of goods. What's happening with that cost? That came out this morning as well. The expectation was that durable goods orders, people ordering, companies ordering those durable goods would go up by 0.7%. And it didn't. It only went up by 0.4%. So that's kind of a miss there. That means people aren't ordering as much as they expected. And that's really companies, you know, kind of buying stuff. As a matter of fact, core capital equipment orders actually went down 0.7%. And that was a pretty big swing from where it was last month, where it was up 0.8%. So that's about a 1.5% swing in core capital equipment. So some numbers there. You know, the traders are still trying to digest everything. When it first came out, when the GDP number first came out, we saw a big bounce in the Dow. We're seeing that kind of level off now, right, and starting to slide back down just a little bit. We'll see where that is when you and I get done this morning. But for now, it's looking like some decent news.
All right.
All right. So let's talk a little bit about earnings, right?
Okay.
Earnings. The big thing this morning, the big news is Facebook, which is now known as Meta Inc. META.
Right.
So they reported weaker than expected fourth quarter forecast. They missed on earnings for this last quarter, the third quarter. They missed by a significant, I say significant. I mean, they came in at $1.64 a share. They were expected to make $1.89 a share. Revenue was just a tinge better than expected. So that was good news. But here's the deal: they're building this meta universe, right?
Right. Yeah, I was reading an article about that a little while ago. It's kind of over my head, but it sounds like you know, they got some issues they're trying to work through, right? I mean, this is some big projects they're trying to make happen.
They are, and they're spending a bunch of money to make this thing go, and they're not getting the traction that they thought they would get for this metaverse. And so that's weighing heavy on them, as well as ad revenue for all social media areas is falling, not rising anymore. Ad revenue is falling across pretty much all platforms when it comes to social media. So not good news for them. They are getting smashed this morning, down almost 23%, after closing down yesterday over 5.5%. So we're almost down 30% in 2 days.
Wow.
Yeah. And this is a big dip from their 52-week low. Right now, the stock, if it opened right now, would be at $100.14. Prior to today, the 52-week low was $122.53. So a huge drop for them. And they're down. I mean, their 52-week range, they've been as high as $353. So they're down almost, I mean, somewhere between, 60 and 75% from where they were at their high.
Isn't that something? Wow.
Yeah,
okay.
Crazy numbers there. So that's our big loser for today. Let's talk about Ford. We had GM report earlier this week, and Ford, not so good. They reported a loss of $827 million in its most recent quarter. Again, having supply chain issues. They also had a little bit of an issue because what they did is they dropped their autonomous vehicle unit. And so that cost them some money as well. So Ford's taking a little hit this morning, down 1.6%. We did have a few things that have some good news though, Scotty. I'm trying to find some good news here.
All right.
We had Caterpillar reported, and Caterpillar, they did well. They beat on earnings. They beat on revenue. So some good things happening from them. The construction, they're just making it happen. They're up 4.5% this morning.
Okay, good. Yeah.
Comcast reported. Comcast, they managed to beat on top and bottom revenue as well. They had they had I'm trying to think, it's not in this report, it's another report, right? They actually end up increasing their internet subscribers by just a little bit more than expected. So that was good news for Comcast.
Sure.
And
Yeah, that's good.
they're trading up 4.9% this morning. Good move for them. And the last one I have for you, Scotty, I'm sure you try to stay away from this place, but it's not the
Okay.
healthiest place to eat, right? McDonald's.
Oh my
So
goodness. Okay.
McDonald's reported, and they beat expectations in the most recent quarter. They're, even though they've had to raise prices because costs are going up, they've managed to get people back in the store, or at least through the drive-through. And so they're trading up 2.5% this morning. So some good news there for McDonald's.
All right.
So,
Good.
so where's that put us now? Well, it puts us a little bit of a mixed bag this morning before we get started.
Yeah.
We got the Dow making a huge jump, up 0.8%. That's $256. You know, the S&P 500 is kind of flat right now. It's well, it just went red. It was green, just went red by about 40 cents. So you know, it's going to oscillate back and forth here for a little while. And then the NASDAQ 100 is in the red by about 0.5%. And so so it's going to be an interesting open this morning. On the other side, the commodity side, we've got silver backing down by about 0.8%. Gold down by 0.5%. Crude oil's really getting out of my comfort zone here, Scotty. Up a little over 1% this morning, well over 85 at $88.82. Man, it's almost at $89 a barrel again. And you know, that's just not good. Gas prices will start to really skyrocket when that price continues to go up like that. So not good news on that front. If we look at kind of Europe and Asia, they're a mixed bag right now when it comes to those. And Asia is, yeah, both of them a mixed bag across the board, depending upon what country we're looking at. But hey, that's where we are. It's going to be interesting as we close out this month. This is the last full week of October. And so tomorrow is going to be an important day to see kind of how the markets can line up. Before we leave, let's kind of just remind folks that, you know what, if you're getting close to retirement, it's important that that you know how much risk you have in your current portfolio. Give us a call at 863-382-0037 to walk through our core retirement design. We'll help you design the retirement you always dreamed of, making sure that the amount of risk you have in your portfolio lines up with the amount of risk you should have. Too much is not good. Not enough is not good. You need to be right there where you should be. Give us a call, 863-382-0037. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730, 95.3 FM.
Well done as always, Phillip. Hey, I spoke with Morning Dave last night. He's doing much better. I expect he'll be back tomorrow morning. So Dave will be back in the big chair with you. Always enjoy our time together, Phillip. I truly do. All the best to you and yours, my friend.
All right, man. Hey, you have a great day and enjoy getting to sleep in a little bit tomorrow.
You bet. Thanks a bunch, Phillip. At Statler Financial Services in downtown Sebring.
Hey, folks, again, we've got one more day left this week. I hope you'll join us for that last day. It sounds like Dave will be back. Looking forward to it. Until then, have a great day.